live trading room where we're taking a look at the London Open that will start in some 15 minutes from now. Before we do that though, welcome once again to Admiral Markets, and also this disclaimer explaining that the material is meant for global audience. Please take into consideration that the information in this session may not be suitable for everyone though. To get the corresponding info on charting conditions and any other details, take a look at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Then also, of course, the risk involved with trading global financial markets and Forex is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that, and this webinar is for educational purposes only. All right, so continuing with this webinar, you agree with this risk disclaimer and the content of it, and are aware of the risks involved and that you are responsible of those risks. Good. So let's move on. Good to see you, Piotr, and everyone else. We're going to take a look at trend lines. How do trend lines fit in? We use them often with fibs and moving averages, for instance, and trend lines. And well, today we're going to take a specific look at the trend lines. We can use them for defining the trend. We can even use them for searching for opportunities such as pullbacks. Filters even could be used for trend lines. Trend lines are very multifunctional, and they're really possible to use them in multiple ways. So we'll discuss that all. In any case, this is a short trading plan where we're looking at the trend, the opportunity, filters, trigger, and an entry method. And the trend line could help us with most of these things, in fact. So what is the difference? The trend, of course, we're either trading with it or against it, or a potential sideways range. I like to trade with the trend primarily. Searching for opportunity could be, for instance, a chart pattern within the trend for more upside or downside trend continuation. Filters could be, for instance, divergence if you're in a trend. The trigger could be a break of the trend line, but the entry could be, for instance, a pullback to a fib. With that said, make sure to take a look at Admiral Markets and social media, and then we can take a look at Forex Calendar. We don't have much today. We have lighter news, green news, as you can see, and some yellow tagged news and one red tagged event on the dollar today, so nothing major going on. Yesterday we had a webinar with Tarantula on the euro dollar, pound dollar, and odd USD. Tomorrow we have reversal trading, and Thursday we have trading psychology. So if you want to register for one of those upcoming webinars, just go to admiralmarkets.com, click on click on education, click on webinars, and then the sign up button for all of the webinars you would like to see. Tarantula and I will be talking about scaling in and scaling out on Thursday. Alrighty. So with that said, let me get rid of this. And let me show you this. Goody good. So let's start with the euro dollar. Euro dollar, let's see, last time we spoke was Thursday, of course, which is which date? The 20th. So what happened in the meantime after the 20th? Friday and Monday specifically. Let's see, we had a bit of downside here. Oh yeah, I remember we were saying that as this downside was going, I was saying that be careful, this could still be supporting area. We could still see a bounce. We were watching it on a 5-minute chart and saying, well, if it doesn't break within 30 minutes, that could be the bouncing spot. That's exactly what happened, in fact. We didn't have a break for 30 minutes. We got an upside, still a hook back, because you know how things go. Everything gets retraced still before we go. So what happened is actually 30 minutes, we didn't get a break of this bottom, and you see 2 hourly candles, we get an upside. We still got one more downside, but then we had 1, 2, 3, 4, 5, 6, 7, 8 candles not breaking this bottom, and that was the bigger hook back. This was the smaller hook back. We have the green one. The blue one was the bigger hook back. Does that make sense? So that was Thursday. I just wanted to refer to what we were discussing because the time factor could be useful, and even although it was early in the day, the time factor rule working out pretty nicely. You can see the euro dollar not breaking the green at the spot where I have the green circle, not breaking the bottom, nor did it break the bottom with the second attempt and the blue circle. And the time factor rule showing that support and a bounce, and after that we've had upside. Not much of upside, but at least a bit, about 100 pips with 5 shocky waves, and now a bit of a bigger downside. And then yesterday again, the same thing applied. This was back to the long-term moving averages, and again a bounce happened. So we're in that bounce as we go. So still above the moving averages. Moving averages are still bullishly aligned. So same story as last week. Still bullish, although it's moving very, very choppily. Right? But yesterday was the same story as Thursday. Price was moving back towards support, and we got the bounce indeed at the support levels. So what about now? Now there's the potential to continue up. That's looking at the $0 quite choppy price action, but eventually we could move away from the choppiness and start to make some directional movement. That is possible eventually. The target would be at first 138, then 138.30. That would be approximately the zone that we could expect price to go to and stop. Why that level? Well, if we zoom out to the 4-hour chart, we can see, for instance, these resistances in here. But also, it's a target. If we put a fib on this move up, we can see it's a minus 618 target. So that entire zone becomes a bit of a resistance right there. So that's possible today, this upside on the 4-hour chart. And we'll be need to break this trend line. It's not the neatest of trend lines, certainly, but it would give a rough indication of the breakout to the upside. And we would continue with price, although choppily, at certain spots with the upside. Let me see if the daily has anything else to add. Daily chart, if we look at the moving averages, you can see and trend lines, we can see the price has indeed broken out of that downside that we had with a clear daily candle here. And we've had upside ever since. Daily candles above the moving averages aligned to the upside. Plus we've broken out of the purple downtrend line. So there's reason to see bullishness and see an uptrend. There's no doubt about that. We have to, stick to analysis that is non-biased and as much as we can. Of course, everyone has a certain bias, but in this case, it's difficult to be biased to the downside, unless there's someone who's using maybe an oscillator that I don't see or something like that. But the technicals are certainly saying it's an uptrend. Is it the good upside trade? That's another question, of course. Not maybe the biggest fan of the trade to the upside because the space is limited. It's only about 50 pips, but still 50, 60 pips is better than nothing. But it's difficult to see it differently if you look at these technical tools. It's difficult to see it differently than a bullish uptrend, right? Because if there wasn't any downtrend, then we would have stayed below this and we would continue like that. We didn't do that. We are making higher highs, higher lows. So, how do you say it? Objectively, everyone has to see it as bullishness if you look at it objectively using these tools. If someone else uses different tools, then there could be maybe a different opinion. But weekly candles are also making higher highs, higher lows of the candles themselves. Now, of course, once we do make that upside, if we do that, then we are bumping into resistance. We have to see how price responds to those levels. Do we get a bull flag? Then a break of that bull flag, we could see probably follow through to the upside. Eventually, a break of this top, where I have the blue circle, would be a potential breakout, and we could see follow through maybe to the upside. Now, that follow through will have its ups and downs, but that's possible. So down to the 15 now, and we can see that the price is attempting to move away from the moving averages. So I wouldn't be trigger happy here. I think that's still a bit too early. I'd rather wait for the break, pull back, and the next continue, because then there's a higher chance of follow through, I think. Let it prove itself first. It's early in the day. The market just started. London starts in 4 minutes. very early in the day. There could be a lot of volatility connected to the open. There could be a lot of spikes up and down, especially if the moving averages are this flat. Despite the 4-hour bullish and daily bullish structure, it doesn't mean that the trade has to go up now, right here, immediately. There could be a lot of upside and downs within the 50-minute world before there's a directional move, which would probably be to the upside, but you never know. So let it confirm itself. I would say let it confirm itself, let it prove, and a couple of hours from now, when it, maybe 2 hours from now, when it has a good upside direction, look for a hook back and continue. That will probably make more sense than jumping in right now, right here. I think personally, it is possible to do that right here, right now, but then the stop loss could be better to use a bit wider stop loss, maybe like here, because just in case it does make it down, it will probably not break this bottom at 137.07. And then you're more defensive in case this makes a sudden spike down. Then there's a little bit more support, which could then send it up again, and the stop loss is just tucked a bit safer. I like that stop loss better than using the very tight one here, because that is vulnerable to, especially early in the day, to such volatility. This is the euro dollar. I like the pound dollar more, to be honest. That's a good question, Bob. I don't think there's really any method to know. There's always, though, a decent chance of a pullback, especially if there's not a major news announcement, I would say. How far that pullback will go is always the question. Indeed, we never know. We never know. Sometimes they go further, indeed, than one expects. That happens, but it's a question of, yeah, it's a question of living with that, I think, because I don't think there is any way to know that so precisely. Indeed, like whether this one will pull back or not. So let me take a look at this pound dollar, and then I'll take a look at your question. Okay, I'm done. So pound dollar, I think is very interesting at the moment. There are a lot of reasons why. I don't know. I don't want to rehash everything. Some of you have been probably in this room more often, so I don't want to go through all the things. But one thing I definitely want to state is this nice trend channel. So let me try to summarize it quickly. Pound dollar has broken a lot of resistance, right? Pound dollar has been in an uptrend for quite a while, and this uptrend channel indicates that. Pound dollar has been on this daily chart above the moving averages for most of its time since summer 2013. So the channels, price action, moving averages, all are pointed to bullish trend to the upside, and all the major resistances have so far cracked under the weight of this trend. So that's kind of the big main term quick summary there, okay, without going into many details. So let's zoom in to most recent price action. And we can see most recently we had a bounce off of support, also horizontal support to the left. That kicked in, and the bottom was the trend channel, and we really started to make a big impulse. Now that impulse, let me put on an oscillator. The 4-hour impulse actually did end here. I was still thinking there could be a follow-through on the hourly to break the top, to get hourly divergence, and then we'll make the retracement on the 4-hour world. That didn't happen. We continued in this correction like this, and we're back to the zero line on the AO, and this has a very strong upside momentum. So it's difficult to imagine maybe sometimes, but this still is an impulse. This is still a corrective movement. Is that a correction for more upside, Or is that the beginning and the base of a downside reversal? Both are possible, in fact. For me, the key levels are this. First of all, this fib. And we did bounce with a pin bar off of the 38.2 fib. Now that's telling me that there is a chance for bullishness. If price were, however, to break below the 50 fib, right, then it is certainly not looking like a bull flag anymore. And there is potential to move down from the 50 to the 61.8, from the 61.8 to the 78.6, and maybe if we break below the channel for more reversal potential. Anything above the 50 though, especially if we hit the 50 and bounce, or if we stay above the 38.2, is ready potentially, if we look at the AO, for a move to the upside. This bull flag looks about finished. If it isn't finished, then we could see a move down to the 50 fib, and if it breaks the 50, then bigger retracement is happening and maybe a reversal even. So this fib is very important in my opinion. Let's see, the daily chart. Let's take a look at the daily candles a bit more closer recently. You could see here 1, 2, 3, 4, 5, 6, 7 bullish days. Then we had 1, 2, 3, 4, 5 bearish days. This was an entire week of bearish price action. But yesterday on Monday, we had a bullish pin bar right there. So in that regard, this is looking like a good daily pin bar off of the 38.2, just like the 4-hour as well. We see a pin bar. And if we then zoom into the hourly, we can say that this is pretty big choppy zone indeed. It's like a 2-hour channel, as Bob has been saying, has said. So if we then connect, for instance, these tops, something like this is possible, or even just putting single trend lines on the chart, like this, and this, and there's even maybe a trend line like that possible. So there's a potential breakout right here. It's an early one. The more confirmed one is above this. We also have some horizontal levels. So it depends how early you want to take it here or upon the next break or upon the next break. I think if anyone takes this early break, the first break here, the stop loss should be probably below here just in case. One could put the stop loss here, but that is also more prone to wicks up and down, just like the euro dollar. So it depends how much risk you want to take on that. Tight stop loss, better R2R, looser stop loss, higher probability success. So that's the hourly, and you can see, well, will this pan out? We don't really know. We never know. But it is certainly looks like a bullish structure, right? The entire week, the entire daily, even weekly 4-hour chart is bullish. So it's most of the cases, there's a good chance that this is just a correction from our upside. If that were to happen, the first target is the minus 272 at 169.76. That's just below 170. But that doesn't have to be the end target though. It can continue up to minus 618 at 171.70 and potentially even further, but that's something we can discuss later on. All right, so 4-hour chart, we can see the moving averages are flat here. And now trying to get a break, but the price has bounced off of those, or even went back to the blue moving averages, so it is back to support, and using that as support for potential bounce. Let's zoom into the 50. You can see moving averages, price is already above that. Moving averages are aligned to the upside, which is looking more like a sustainable setup than anywhere before that. Because if you look at the previous 50-minute world, price remained below the long-term moving averages. These dark red ones, price stayed below them, except some spikes here. But those were spikes here only maybe. But otherwise, this is the first time the price is really staying nicely above those moving averages. We have a trend line here, and also looks like we're breaking above that. So to me, an entry, it depends how aggressive you want it, but even an entry above, for instance, so I take a look at the 5-minute world here. Even this dip back wouldn't have been that bad, but anyhow, that's past. A break of this top would probably be not bad. It would be a break of the 5-minute and continuation, basically, of the 5-minute world. If we look at the 5-minute world here, it's basically a break, pullback, continue. It would be to continue on the 5-minute world, but on the bigger time frame, if we look at the 4-hour chart, it would not only be that on the 5, but it would be the break of this 4-hour fractal resistance. Personally, I like the looser stop loss more because that's using yesterday's low. Now the chances that that particular low will be broken today are very small, and the chances that they'll be broken the next 2-3 days are also small. So I think that's a very safe one. The target could be 169.70-ish, 169.60. Would be around a 2.5 to 1 trade, 2.5 R2R trade. So I like this pound dollar a bit more. Let's see if that euro pound is confirming that. Not really. Price seems to be moving up at the moment, although we are in a bigger downtrend, as we can see, and price had a big wick here. So that would support more pound strength than euro strength, in a way, although recent price action has been moving up. Let's see. I'm not sure, regarding your second question, how many candles you await for the confirmation. Not sure what you mean. I wouldn't wait for necessarily a number of candles. I would wait for a certain level to break. For instance, this one that I just mentioned. So regarding how do you put moving averages on the charts, just bear with me, folks, for others that already know that. I'm just going to show quickly how to do that. So if this is a blank chart, what you do is go to Insert, Indicators, go to Trend, go to Moving Average. Click on Moving Average. Click on the period you want, 34. Shift, most of the time leave to 0. Exponential close. And you can change the close, for instance, to high or low for the other two. And then click the color, your thickness, and click OK. And you have one of those moving averages. Claudia, you mean, I'm not sure what your question is intended. You can add this moving average on any time frame you want. Depends on you. I have these moving averages on all time frames. Yes, this moving average I would use on all time frames indeed. Great. So hope that helped, Amdad. If you have any questions, let me know, okay? If you have any follow-up questions. Otherwise, it's insert, as I said, insert indicators, trend, moving average, and then the values. And you can save that as a template by going to Template, Save Template, and you could just apply these moving averages on all charts by going, once you save the template, go to right-click in the chart, go to Template, and then saved and then load template if you already saved it. If you want to add a second moving average, you just do the same. Go to Insert, Indicators, and go to Trend, Moving Average. make the value different, otherwise you wouldn't see it. So make it, this one will be high, and click OK, and you'll see the second one pop up. And then you have two moving averages on the chart. If you want to use those two on a different chart again, you can save it as a template, as I said. The MA, you can change colors by right-clicking on the MA, going to MA34 properties, and then clicking on the color, and then changing color and clicking OK. If you mean regarding the green to red, that's a special angled indicator that I use for moving averages. And yeah, you can write me an email, and that's no problem. Okay, I'll send it to you. The difference between SMA and EMA is EMA is faster in its response. SMA is a slow moving, no, it's smooth. Sorry, smooth moving average, and E is exponential. Sorry, and that means that it reacts faster to current price movement. Let's see, Björn, when you are at indicators, do you know if Admiral block robots? No, I wouldn't think so. That's weird. Well, not that I know of. Let me say it this way. But I don't know for sure. It's best to ask the customer service, I guess. Don't know anything about it though. I hope not. I want to use one of them in the future as well. Yeah, best is to call them indeed. Yeah, you'll get a direct answer. Yes, I'm using a special indicator for moving averages that shows the angle. That's why. And that's pretty useful indeed, because I just found, by the way, while Googling it, it's not a special indicator at all. It's nothing magical about it. It's if you would Google trend change colored moving average, I don't know exactly what I used, but that's how I found it. Yeah, the platform, the MT4 recently got updated indeed. Adrian, that's true. So I didn't do that yet. I can imagine maybe you have build 610. Okay. I'm not sure what I have, in fact. 1 second. I have 600. So it's not that old, but it's about a year ago, the last time I downloaded it. The name of the indicator, let's see, let me check. What was it? MA in color, applied price. But if anyone sends me an email, there's no problem. I'll send it to you, okay? If you don't want to go, if I can imagine, I don't like searching either, so. Let's see. So pound is moving up, getting the bounce. It already looked like that. You know, that's the difference with confirmation sometimes and taking an early entry. Basically, here we already saw price moving up and using the moving averages. And the moving averages, look, when we zoom into them, we can see that they are being torn apart here by price. So we can see that they're getting a bit of angle here. Now, will it move up in one shot? No, of course not. It's going to have a lot of ups and downs, but as long as there could even be a bigger spike, who knows? I'm not saying, but that doesn't have to be. It could also move nicely up like this, and the moving averages could be torn further, and then once they have a bigger angle, once the moving averages will have a steeper angle, then the fact that they have that angle means that there's a trend and an impulse and momentum, and once they have that angle, then there's a higher chance of price working as support in this case. Okay, email is written there in the chat. So that's the pound. Let's take a look at the Aussie. Aussie's been stuck. We can use two good trend lines for that. This one that indicates the support level, and we can use this one now, I guess, or we could have used this one as well, something like that, to indicate resistance. Yesterday we had this one as well, right here, as you can see. Now we had a break of that line, but then bumped into resistance, as you can see. I couldn't break that. So I personally, I'm a bit cautious with this audio USD. We can see clearly resistance. We can see if we pull back this trend line a bit more, even like this. Clearly resistance and a clear support level. One of these two would have to break for me to have an idea that this is indeed going to move anywhere. If it does break, look out for this 91.70, but primarily 92 would be the main target, which is the 50 fib. If it does break to the downside, that's the upside. If it breaks to the downside, then it could fall to maybe the next support level, which could be, for instance, this trend line here and this top. Right? So there could be that fall. And if that breaks, then another fall to the bottom. That would be the bearish scenario if we break the support line. As long as price stays in between these two purple lines, though, I would be a bit cautious. I'm not saying there couldn't be any trades at all. Yesterday there was that break to the upside here. But yeah, that I wouldn't trade right in here because obviously we're about halfway this zone. We're halfway that between the purple lines there. So either, if you want to trade it as a range, either wait for the move back to the support or back to resistance. But of course, there's always a chance of a breakout, and that's the risk that range traders have to take. Alrighty, folks. So let's see, Kiwi. We were talking about the Kiwi on the daily chart. Some bearishness here. Then we had a bullish candle, an inside candle, and then yesterday again a bullish candle, which is funny because that bounce is happening sooner actually than I expected. This is looking like a range if you look at the blue and magenta line. So I was thinking a fall back to blue could be possible. That hasn't happened as yet. Could still happen, by the way. I'm not big fan of this Kiwi because it's so choppy. But to me, although price is above moving averages, this is looking more like a reversal potential from 61.8 to fall down to support. And this looks like a hook back from our downside, but who knows, maybe this is not as yet ready for a reversal, but that's how it looks like to me. If it does break above this trend line, for instance, then I guess that reversal is not going to happen probably, or not immediately, and we could have some upside break. The downside could happen, I guess, more if we would need to break below support. We could have various lines of support. These two, for instance, and the moving averages could be support. So there could be some space here to fall, and then below the trend line. That would be indeed the reversal confirmation that I was talking about. If I look at the 4-hour chart and hourly, it looks like a potential hook back for more downside, but it's definitely too soon to tell. It's stuck in the middle at the moment, so it's early to say anything about either direction. Let's take a look at Swissy. Swissy is moving down. That is aligned with the euro that is moving up. Dollar CAD has been retracing strongly to the downside here and has bounced off the 50 fib, as we can see, and the long-term moving averages. Getting some bounce here. So what does that bounce mean? Is that something that's interesting or not? Let's take a look. 4-hour chart, we had a strong impulse up. Back to the 50 fib. Off of the 50 fib, we had again a strong impulse up, and then back to the 50 fib. So yeah, there is a good chance that this is a bouncing spot. We can see that the daily chart, it was already in an uptrend, and most recently it got an extra acceleration here. So there's definitely reason to believe that that could be a bouncing spot. So back to the 15. This is the hourly. Got some bottoms here, now breaking this consolidation. So there could be some CAD weakness. Let's see. Now it depends how any trader would like to tackle it. Some traders could be already in it upon the break of this consolidation here, indicated by magenta. The break to the upside could have been an entry. Some could wait for a move up, wait for a hook back, and then try to take it somewhere in here. That's another way of doing it. Some could wait for the hourly for price to break above the long-term moving average, for instance, and then there's more confirmation of the trend. Could be worth it. I'm trying to see if it's worth it right now. Normally I like confirmation more. That's why I'm a bit not too jumping for joy to take it on the early side. I'd rather wait for a bit more confirmation than try to anticipate the move. I'm definitely a confirmation trader. So this to me is a little confirmation, is not normally the confirmation I'm looking for. I would rather see, for instance, the 50-minute world here at least move over the long-term moving averages, for instance, normally speaking. I'm trying to judge if this could be an exception and see if that would make sense to make a bit of an exception and take it a bit earlier. But I'm not sure. I think still waiting for a break, pull back, and go makes sense. But if you like trading it a bit earlier, then this could make sense because the stop loss is tighter here than if you wait for confirmation. Let's see, dollar yen not able to push up at all. It's very choppy. We have this resistance line here and we have this support line, And well, we'll have to see. At this moment, this could be more of a rising wedge than anything. However, I'm bullish on the dollar yen, but my bullishness is really only confirmed if we start to break above this top finally. And as long as we don't, then this is starting to become a bit skeptical slowly but surely. I'm not saying that the bullishness is over, but the longer it takes, the less likelihood that this is in fact upside, but more chance that this could be a retracement from this downside. In any case, my personal opinion is that this trend line, this support trend line, plus this resistance line are key levels. A breakout of any two of these to the upside or downside will give some confirmation. Upside, we could see the target, this target, and then a continuation up to the minus 618 right there. If we break to the downside, we could see a fall to, for instance, the 78.6 at first, and then maybe even further. Alrighty. Yeah, because until something like that happens, if we zoom into the hourly, we can see it's not easy to trade. Maybe if price will go back to support, that could be a bounce trade, in fact, a bounce or break spot. If price moves up, I wouldn't be looking for, personally wouldn't be looking for downside, but rather for indeed a break to the upside. At the moment, if we put a fib on this downside, we can see that a potential bouncing spot could be 102 or 101.75. That's this correction where I have the red line hook back. That could happen before we potentially bounce. If pound starts to move up, pound yen could be a good one as well. We have this trend line here indicating the resistance. Now, if we break above that, that could be a breakout trade to the upside. Why? Well, if we look at the daily chart, there's a strong trend here going on, like this. Massive trend channel. But not only the trend channel, you can see price is also well above the moving averages. As we can see, massive uptrend, and there was a lot of space between those moving averages here. You see that? The space is getting bigger, 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 smaller, 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 bigger, 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 and recently getting a lot of space. That means there's a lot of impulse. And of course, we know that this is a big trend, and you can see that the moving averages have remained blue since forever. And there's a lot of green parts as well, with some bigger retracements once in a while. Of course, those are the red parts. And with these moving averages, you can of course easily see what is trend by using the blue one, and what is a retracement or a with the trend setup. With the trend is green, retracement red here. So definitely uptrend, and recently it bounced off the bottom. So just like maybe last times where we had a break above this resistance and we had a break above this resistance, maybe if we break above the purple, we have again a breakout trade. And what would be the target? We can put a fib from swing high, swing low. And we had a 61.8 fib bounce, as we can see. That happened right at the bottom of the uptrend channel and right at the long-term moving averages. So what would be the target if we break above purple? The target, the minus 272 target at 179.80, which is of course right below the psychological 180 level. 180. Down to the hourly. There it is. Hourly, we can see this bounce off the 61.8 in the bottom of the channel. This was the bounce on the hourly, slowing down a bit because it's getting closer to resistance. And most recently, we've just been going sideways. we have a potential of this trend line here maybe acting as support, which could be the bottom of a triangle, for instance. If that level were to break, that support level, maybe, just maybe, there's a potential for price to retrace lower. For instance, down to this level or this level as a retracement. Let's take a look at this. We see 38.2 fib and a 50 fib here together with the minus 272 and the minus 618 of this retracement fib. That could happen if we break this support line. Doesn't have to be, but there's a chance if we break that support line that we do get some correction first before maybe moving up and breaking the higher purple trend line. Let me make this a bit different color so that we can clearly distinguish the two. So for the moment, the upper purple one, and then let me make this different. Let me make this orange. This orange trend line, I would say, the key levels at the moment. One of these two breaks, there is a chance of follow through to the up or downside, and the downside could be limited to a potential bounce again. Now, the break of that trend line doesn't have to equate exactly immediate entry. One could always wait for the break, pullback, and either for the pullback or continue, for instance. Doesn't have to be the immediate entry, though. Let's take a look at the euro-yen. Does that say the same? Roughly speaking, yes. Kind of inched through this trend line, so let's correct it a bit. And it's a bit the same like the pound-yen, but maybe most recently we had one more break through the top, in fact, which didn't happen on the pound-yen. That's because the euro-pound was moving up a bit. So we have this channel. Or let me make that a channel. In fact, that's actually the best. Let me make that a channel. 1 second. It's a pretty neat channel, indicated by the blue lines. And we got two magenta lines indicating a potential wedge as well. And price is above the moving averages. So definitely bullish structure on this hourly channel, hourly chart. We're very close to the resistance, so we do need a bit of a break above it to accelerate outside of this channel. If we break below these supports, there's a potential to make a retracement, but those retracements are always tricky. They might not go as far as we expect. Let's see, how about this euro odd? Let me take a look what we have here. We have the potential to break to the upside, I can see. For instance, this trend line maybe. Like this. We also have a clear support level like that, which we broke already, in fact. Let's zoom into that. Price broke through it, could be hooking back for more downside, but that's difficult because this could be a hook back for more upside. So for me, I would be cautious with this break. It could be a potential break, but I would rather wait for the next break again, which is here. That could be a better indication of downside. So I would keep an eye on this trend line at the moment. The upside trend line as well, that could be a good indication of upside to continue. So these two orange lines indicate the lines in the sand, the lines of confirmation for the moment. So let's take a look at the daily. Daily, we can see the potential for price to be an uptrend as well, although it is stuck in the moving averages still. Obviously, before we can see tremendous uptrend here as well. And we can probably put a channel here too. Yes, here too. So same story as pound yen, although the euro yen was a bit slightly bearish, more bearish, but its structure maybe slightly, because you can see that the downside was pretty powerful and the upside has been pretty weak so far on the euro yen compared to the pound yen, but otherwise roughly the same. Just looking for upside here, preferably. Downside seems to be limited unless we break the blue uptrend channel. So most recently we had a bounce off this support. As I said, I wouldn't be looking to trade it at least below here unless we break below here, at least at minimum or above here at the moment, personally. The 15-minute world is trying to make some upside, but the problem is that we're halfway this triangle at the moment. Pound odd. Pound odd actually broke, but it didn't break as much as I thought it would. We did get a break. I did take the pullback here, and the bounce where I took here made about 2-to-1 R2R when I reached the resistance. Now I was actually aiming for higher, but it never got there, and then we had a bit more downside. Bounce off this support, as we can see, but never got the follow through above this purple, and actually started to make a bigger retrace. So let's see what's happening now. It is a very big choppy move, and it's not as nicely structured as it was. Let me get rid of everything for the moment. That looks better. Let's see, 4-hour world is actually looking pretty choppy, so I'll be careful of it. Moving averages are flat at the moment and no real direction. If you look at the daily, quite choppy move. So for the moment, I'll be on the sidelines. Pound New Zealand and Euro New Zealand remain very choppy, so I wouldn't be looking at them that much. Let's take a look at Pound CAD indeed. Björn has a comment on that. Let's take a look. Yeah, actually, if we want to capitalize on the CAD weakness potentially, then the Pound CAD could be better indeed. Good observation, Björn, because there's potential pound strength today, maybe. Although the structure, let me say it this way, looks bullish to me. So in that regard, Pound CAD would be better. Agree. Now we broke out of this resistances, the orange and the red, so let me take those off. And we had a 50% bounce right here, and most recently a 61.8. What will be the targets of that? Up higher. This is the 1-hour chart, by the way. So let's zoom out to the 4-hour chart and see what's going on there. Let me get rid of these fibs. Alrighty. Wait, let me put back that uptrend channel. I like that one. Good. Right there. So, 4-hour chart, definitely bullish, right? Daily chart, definitely bullish. Tremendous uptrend away. And weekly, we can see we were in a very big consolidation here, as we know. But boy, oh boy, are we getting the massive uptrend. So what are the chances of continuation? Still pretty decent. I wouldn't know why not until we get clear signals that it's over. We did have a bit of a wick 2 days ago on this candle, two trading days ago on Friday. But you know how it is. Ride the tide, and the tide is definitely up. And I don't see that significant signals. I'm sure there was a bit of divergence, but I mean, there's probably been divergence already for quite a while. So this thing is just retains its upside, and as long as it stays in this uptrend channel, and as long as price remains above the moving averages, I don't really see anything to change that view. No evidence of any reason to think otherwise. So this is looking bullish to me. Now, how is it a potential trade? Let's take a look. 4-hour chart. One way of trading it could be a break, for instance. Well, the 4-hour doesn't have really a neat structure. A break of this resistance could be that. The hourly, I would even wait. I would wait probably for, as I said with the cat, I would wait for a move up, a retracement. Either take the retrace or take the continue part. Either one of the two. So I would still wait for a bit more confirmation that we're getting the break above the moving averages on this hourly. I'm interested. It's on the watch list, I would say, but it's not yet ready for an exact trigger, I would think, in my opinion. Okay, but good observation, Björn. I like this pair. Could be better than the pound dollar, though we have to keep an eye, of course, on pound dollar to have an idea about that. Let's see, what else can we discuss? Let's go back to the euro and pound just quickly to see what the updates have been in the last couple of minutes. 50-minute world, we are seeing some follow through. The last hour, we've seen some upside, small upside, about 17 pips so far on this euro dollar, as expected. That we should see that upside. I wasn't too interested in taking the immediate break because I didn't want to be trigger happy, as Tarantula says, and I didn't want to be vulnerable to some spikes, but this upside is expected. Let's see if we get a follow through now. Okay, with follow through I mean a pullback and bounce. How about the pound dollar? Pound, well, it attempted it, right, but it didn't get the break. So that's sometimes good if you have a pending order above here. It didn't get filled in, or at least not mine, because it broke only by 0.4 pip, which is nothing. You should always have a few pips above that. So that's good. So we did have, you can see price moving above moving averages, and we did get a break, pullback, continue, but the continue failed, and we're moving down now at the moment. So now the idea is still valid, in my opinion. This could still be a pullback for more upside. This could still act as support for more upside, right? This is just the usual kind of ups and downs, probably the usual ups and downs before the currency moves into a bigger direction. Do I know for sure? No, but there's a decent chance, and it's all about opportunity. It's all about finding that opportunity, right, folks? It's not about prediction. Keeping it simple is always the best way to set ourselves up for success in trading, right? No one knows what's going to happen. Let's face it. No one has the key. No one knows what the future will bring. The market is full of insecurity, and the only thing we can be certain about is that it is insecure. That's the only thing we know for sure. It's the only thing we can be 100%, 100% sure of is that the market is insecure. The only thing that we can also be 100% sure about is our trading plan and our control of our emotions and the implementation of our trading plan. That's the only thing we can know for sure and do 100% influence, right? Or 99, right? But there are certain things that we just can't influence, and that is what price will do. So might as well not blame ourselves for that. Might as well not get emotional with the win or loss, because it wouldn't help. Right? As one trader actually advised, I read an article today, and what I liked about his advice was that I think he, if I remember correctly, let me see, the author is, yeah, he said that basically the core of trading is a change in perception. We have to really thrive in insecurity, right? No one knows what happens next in the next moment. That's valid for everyone, right? As we know, and basically we just have to accept that we don't know, accept the future as positive, see moments as opportunities rather than threats, and just try to trade as an open mind that is looking forward to the next moment. And if the trade gets stopped out, then just treat it as something where you can learn from, and accept it as just one of those things, because no one really knows. The only thing we can really judge is opportunity, and make a plan. That's all we can do. And try to gain an edge day in, day out, or hour in, hour out, depending how frequently you trade. As I said, this could be a bouncing spot. Let's see. As I said, I'm not a big bounce trader, so I don't tend to take these trades too often. I rather wait for breaks. So I'm waiting above this top personally. But I do see bouncing spots. This could have been one of them. Let's see. Your dollar is retracing. Let's take a look at CAD Swiss. Bob was asking about that. That makes a lot of sense. Let's take a look. So CAD Swiss recently, sorry about that, there it is, recently continued, as we can see, with a fall from around 81 down to about 79. There was about 150 pip fall. I caught some of those pips, about 100. And yesterday we had a bullish daily candle, getting a bit of a bounce to the upside here. So will this CAD weakness continue, and will this CAD weakness continue against the Swiss franc? That's the question. 4-hour chart, we're back to the red moving averages, as we can see, which means that we could be in a retracement here. The hourly is back to the long-term moving averages, as we can see, and the 50-minute chart is already in an uptrend. But we know from the multiple time frame analysis that that upside could be retracement. So I think keeping an eye on, for instance, this trend line, indeed, Bob, I like that one. Makes a lot of sense to me. Looks like a break of that level would be a good indication that we are continuing to the downside here. Yep, that's a decent one there. Let's see the fib. Price move up to the 50 fib and the long-term moving averages here. Let's zoom back up to the 4-hour. So if we do respect that 50 fib, and if we do break below orange, there could be a fall down to the minus 272 target, for instance, at around 79. Maybe even lower, maybe down to 78 if it starts to accelerate further. How much could it really fall in the long-term perspective, for those of you who are wondering, because this has already moved down a lot, so maybe some of you are wondering, like, wow, how long can this last? Good question. It's already retraced a lot of this upside bounce with the CAD Swiss. It was almost at parity. Now it's down to 80. The ultimate bottom here, and this big spike was 71. So if we put a fib on this entire upside, just to get an idea, the 78.6 fib is around 77. Now that's a level where I definitely would want to become cautious, because that could become a support level. But for the moment, we're in between the 61.8 and the 78.6 fib, so there could be some downside continuation until then. Let's see if we have divergence, though, between these bottoms. There is a bit of divergence, which means that there is also the potential of price to go back higher and retrace higher back to the 81 zone here, and go to, for instance, to test these tops right in here. Let me put the line there. Maybe this bottom here, for instance, or this one, or this top. Price could go up there because there is divergence between the bottoms, and in that case, when you have divergence between bottoms, especially on a higher time frame, the main target for the moment is the long-term moving averages, which is the dark red ones there. That is the primary goal of the divergence. Now, does it have to go up there? No, but at the moment, that is something which we could also anticipate. So it is a bit difficult. We're stuck in a hard spot here in the sense that we did make a retracement up, and it looks like it could break to the downside, but we have divergence, which means that we should be cautious of the potential for it to move up like this. So personally, either shorting the orange line, that could make sense, but there is that danger of divergence. So if we break above this top, by the way, then there is that chance that the reversal could be on its way. And if we do top out around here or here, those could be good downside continuation trades. So I would be careful now of both breaks, to be honest. Both these orange lines indicate potential resistance and support. A break of both of them could be good. Could also be a bit shaky in its break. So I would rather wait for the break to see how the break is. Is it the confirmed break? Is it a good break? And then take the pullback. Then the immediate trigger happy trade here, which means the immediate entry up on the break on this cat Swissy. Interesting situation though. Let's see what else. EuroCAD moving up as well, just like the others. Pound Swissy. That's pretty choppy. Look at that. Not too interesting in my opinion. Very choppy. Maybe the hourly has a bit better, but how about the odd New Zealand? Let's take a look at that. Ooh, that's choppy too, although this is a 50-minute world. That looks pretty messy too. Maybe we could say there's some consolidation here. There's some consolidation here, maybe like that. It's difficult to say. Probably the moving averages are the best actually for this. So either a break below the blue moving averages or a break above orange. That would be probably the most important lines on this odd New Zealand. But we have to realize that this odd New Zealand has had a tremendous downside. This downside trend could be over finally. Because why? Because if you look at the monthly chart, where are we right now? Well, we're right at some big multi-decade support, right? Plus we had a big wick on January's candle here. And if you look at the weekly, so those are reasons that if you look at the weekly, we have some upside here. Plus we had tremendous downside. And if you look at divergence, we certainly had that, or have that. Right? Maybe not on the weekly, but on the daily, let me see, you should have it, I think. Well, a bit. It's not as strong as I expected. It's not as strong as I expected. I thought it would be bigger, this divergence. So actually the most recent downside is the strongest of the downside, just barely. So although there is these bottoms are equal to each other, so maybe slight divergence, but not very major one. So maybe one downside more is possible. Eventually, though, this downtrend is going to reverse a bit, if not just at least back to this long-term moving average, for instance. Could it happen now, or could it happen after some downside? That remains the question. I would think that at the moment both are options. So a break above this orange would mean we are going to make a bigger retracement, and a break below blue could mean that maybe we're going to fall first before we do that. Both have a pretty important implications. Sorry. But obviously this downside was very strong, very long, and very powerful. It could last still a bit, but we do have to realize that support here and the pin bar here are important levels for this downtrend maybe that could stop it. So any questions maybe that you have after our session today? We'll be back tomorrow for sure, of course, same time, same place. If you have any questions, let me know. Let's see, your dollar, pretty good. Up move, but now just, or it's not even that fantastic, but it's now just doing nothing and getting some retracement. Let's see, pound, still messing about here, but looks like it's finding some support, as we can see. How about the dollar yen, Aussie? Continuing down. How about the dollar yen? Sorry, still moving down a bit as well. Pound yen 2, euro yen 2. Tomorrow we have webinars on in the trading room, of course. We'll take a look at reversals, and in the evening, Tarantula will be sharing his advice Wednesday evening. Let's see. I don't have a question, but I have a comment from Buren. For those that don't know it, my FX book gives a great guidance regarding stats, by the way, Buren is saying, which is true. So for those who want to have a bit more statistics, that is indeed handy. And it is indeed free. So very useful indeed. Good tip from Björn. Although I recommend to do both. I mean, in the sense that I would still keep my own records if I were you in Excel sheet as well. And other in emails, etc. Thanks, Björn. That's a good one indeed. So if I had to summarize it today, I would say pound looks the most interesting to me. I don't know. And the CAD weakness. I think those two I will be keeping an eye on. The yen weakness too, but we definitely need some confirmation of dollar yen to the upside first. Or pound yen could maybe be better. Aussie just waiting on the sidelines. Your dollar a bit on the sidelines as well. I think CAD and pound look best suitable today somehow, but it's not that I'm, as you see, not immediately trading it. I definitely am a trader of confirmation, so I'd rather wait for that. But looks like the pound is making again an upside here, as you can see, reaching 166.80. Oh, getting some follow through here, getting about a 15 pip bounce off of that retracement, as we said. That could be a bouncing spot. But intraday time frames, of course, have their choppiness, as we can see. The other way of doing it is waiting for this top to break and then waiting for one more dip down, which could happen, could still happen, and then one more bounce off the moving averages, just like we had here and here after we broke here. That's another way of doing it. That depends on what you like more. So I don't see any other questions, so I guess we'll wrap it up for today. Let's see, we'll talk about how this euro dollar and pound dollar behaved tomorrow. As always, we'll make a feedback and reflect and evaluate on the analysis of the day before, and then of course continue with the new analysis. I think that's a good process because it helps. I think it's a good, good to review one's analysis to see, as a standard evaluation tool, like what was good, what was bad about it, what can I learn about it, and it's best to do that not in a atmosphere of regret, right? I don't want to mean like, oh, I wish I did that, because that could be annoying. That could actually make a trader take bad trades or revenge trade. That's not really what I mean. I mean more like evaluating in a sense like what worked well, what didn't, what could have been better. I think that's always useful to improve. So which time frame is popular, Mason is asking. Well, yeah, that really depends on the various traders. I think all of them have a certain popularity, but I'm sure that retail traders do like lower than daily. That I'm quite certain. Institutional traders might even like very extreme charts, either even 1 or 5 minutes if they're scalping, but they could also maybe trade off bigger time frames, for instance. It's such a wide mix, I guess. I think indeed their 15 minutes maybe and 1 hour could be very popular. I like the 4 hour indeed. I'm not sure how necessarily popular that is. I'm sure certain traders look at that. At least to get a good idea of what the trend is. I like the 4 hour indeed. So I would agree with you. I like personally 4 and 1 hour. How many traders really use that? Probably a decent amount. So difficult. It's a difficult question. I wouldn't really know. How about here? Who uses the, what is your favorite time frame? Let's see if anyone, what the majority is here. What is your favorite one, Mason? Somehow I think 15 could be maybe the most popular. Yeah, 30. That makes sense too. It's just a bit, it has just a bit more distance than the hourly. Than the 15, but it's a bit more zoomed up to the hourly. Yeah, makes sense. Especially for intraday, because intraday trading and hourly could take sometimes too long to develop, depending on how you trade. 30 is an interesting compromise. If you use a 30-minute chart, then a 2 hour or a 4 hour chart could be good for trends. Let's see, otherwise we have answers 1 and 4 hour, and Amdad is saying first forward in 1 hour. Mason says 30 minutes, and that's about it so far. So others, I guess, are multitasking. So I'll just give maybe a minute extra to see if anyone answers. Otherwise, I shared everything I wanted to share. So by all means, if you wanted to share your own screenshot in the future, by all means, send it to me. We can take a look at that. Yep, good idea, Björn. Sometimes these smaller position trades, they take time. You're not going to, have the same number of frequency of trades, but it's in my opinion less stressful. There's an easier chance of doing some trade management with it, which means either reducing the risk it's a bit more like slow and surely than the fast lane indeed. So that this approach becomes a bit more sturdier, I would say. If you trade a lot of trades in a day, then there is that emotional stress that can be accompanied with it, and that can be costly. If you can control those emotions, then that's great, but there's always that risk. That's why risk management is always important, of course, but especially for intraday trading, having a max daily loss very vital, not to have a big or too big of a loss in one particular trading day. Personally, I'm more of a trader that takes maybe 1 or 2 on average a day. Yeah, it depends on your own psychology. If you would like a bit more hands-on, which I can imagine, because if you're trading daily, weekly, that could take very long indeed. But it could be a good way to reduce risk, have long-term positions on, and try to get rid of the impatience a bit by taking trades on the hourly. That could help the psychology as well, definitely. It depends all on our preferences. I don't like trading 10 times in a day. Somehow tried that, made some profit, made some losses, more profits though luckily, but still I rather take a look a bit more at intra-week swings indeed than as you do on the hourly, than trading 10 times during a day on the 5. Well, folks, thanks so much for being here and joining me today. I hope you'll be back tomorrow. Wish you all a great day in the meantime. Cheers.